Welcome back to the channel. My name is Brad, and today we have a special guest with us today, Kevin Kelly, and I'm going to let Kevin introduce himself to you.
Hi, thanks for having me. Really appreciate it. So I'm Kevin Kelly of Kelly Intelligence, and so we're an SEC registered investment advisor, and we advise or sub-advise on ETFs. And I've been in the space since 2013 when I launched my first ETF. It was a derivative ETF on the NASDAQ 100. It's garnered a lot of success, but been in the space for well over a decade now, and so I'm well known right now, especially talking to you, for the covered call funds that we sub-advise for Amplify.
So the two that we're going to focus on today is Baggy and Biddy, because they're two new funds and they're writing weekly. Can you tell us something about the strategy?
Yeah, so one of the interesting aspects is there's been a new emerging asset class, which is Bitcoin. And Bitcoin is very volatile. And so what Amplify has done is come out with two ETFs to harness the volatility of Bitcoin to turn it into really attractive income streams, while also trying to preserve upside to the asset class. So the first one is Biddy, as you mentioned, BITY, and the second one is Baggy, BAGY. And so they're very similar in the aspect that they use weekly options. And one of the reasons why you want to use weekly options is because of a volatile asset class. So you can really capture that volatility and turn it into income streams, and you're compounding it weekly. So that's one of the main reasons why you want to use weeklies in a volatile asset class is you get to compound your returns, you get to reset. And so the nice aspect of these two funds is it gives you professional options management in an ETF wrapper.
So currently you're writing about 5% out of the money. Does that change due to implied volatility?
Yeah. So what's interesting about highly volatile assets is they typically are mean reverting, meaning they go back to their normal volatility. But volatility regimes can become very extreme, or they can become very muted depending on where you are in a certain cycle. And so we've pegged for both of these ETFs to sell a minimum 5% out of the money on a weekly basis. But what happens is when volatility really picks up, we can sell further out of the money. So we can go 10% on a weekly basis to generate the income we want. We can go 15%, 20%. It really depends. And so the 5% is really sort of a floor of where we're selling on an out of the money basis on a weekly occurrence.
So one thing I noticed about Baggy versus Biddy is they both hold a little bit of IBIT, but there's a difference in percentages. Can you go over why you're capped at 25% on Biddy?
Yeah, so on Biddy, what it's trying to do is trying to give you as much upside to the Bitcoin asset class through either ETPs, which are publicly traded ETFs that hold actual Bitcoin, or through the options market. And so for the Biddy side, what we do is we write on the portfolio to generate to try to target a 24% annualized distribution rate. And so when you look at the portfolio, we're doing everything weekly. So that's about 2% monthly. And then, sometimes there's 4 weeks, 5 weeks in a month. But the important aspect is that we're trying to give you as much upside to Bitcoin in that particular strategy, the BITY strategy. And so it owns currently today an ETP called IBIT, which is the iShares product that owns Bitcoin. And so we own that up to about 25%. And then we use options to get the other exposure to the asset class.
Sure. How much back testing did you do on these funds before you came out with them?
Yeah, so that's an important question because it goes to the crux of the construction of the strategies. And one of the reasons why we believe these are great strategies is two, is one, pricing. So if you look at it, Amplify always wants to be very competitive, so you can look at the fees associated with that. And two, transparency. So with these strategies, so if you look at the fact sheets, if you go to Amplify's website, it's very systematic. And so you know what you're going to get with these strategies. And that was predicated off of the back test and looking at the different volatility regimes and the history of Bitcoin and why we chose that 5% floor, but also being able to sell, more than that further out of the money on a weekly basis. So it's very transparent. We're targeting, on the floor, the 5% on a weekly basis. We're trying to generate 24% annualized, 2% monthly for Biddy. And then Baggy, we're selling on almost all of the portfolio to generate a high amount of income against that.
So Kevin, why weekly over top of monthly?
That goes back to the key crux of looking at the historical performance. And so when we were looking at it, one of the great aspects is using weeklies versus monthlies. You have in options land what's called theta, which is the time decay. You get more of a rapid time decay in the options. So what happens is it's a more effective tool for generating that income, for that theta decay. When you do monthlies, there's really a path dependency. You're stuck at a strike for a month, and there you are. What's nice about weeklies is that you get to adjust. And so there's a risk management component because you can roll off and on a weekly basis and reset that strike depending on where you are. So if implied vol, for example, is at 40 at one point and people are striking their weeklies there, or their monthlies there, and then next week it's at 40 or 50, you're going to end up generating more options premium. So it's really beneficial for a highly volatile asset class.
Well, one thing that you mentioned was fees. What is the fees?
Yeah. So Amplify, as I like to mention, likes to come out with very competitive fees for the marketplace if you look across their suite. And so for these two products, it's 65 basis points for this, very intensive institutional options writing program that is weekly. So the benefit is through the single ticker access through either Biddy or Baggy, you're paying for that access to that institutional option management.
So Kevin, any thoughts on how much this would be on return of capital, or is that just a varying question that can't be answered at this time?
Yeah, return of capital is always a interesting topic to talk about, especially because it's really dependent on future events that no one can predict, right? Especially when you think about Bitcoin, the price could be up 25% or be down 20%, right? I mean, we've seen, so return of capital actually plays into the performance of the underlying asset. And so it's really hard to discuss return of capital because you could garner a lot of options premium, but then if the underlying goes down, and then what is the distribution? So return of capital is really a very tough topic to bogey, especially in a highly volatile asset class like Bitcoin.
So right now you're writing on an index. Is that going to change in the future?
So it's a systematic index strategy. It's an actively managed, given that it's options. It's not going to change. And the reason why is because we want to give transparency and we want people to have conviction in this strategy so they know exactly what we're going to do. Because what we've seen is in highly volatile times, or managers can go off the reservation. Now, we don't want that. We want people to know what they're getting and how they're getting it. And so I think that's an important aspect when you're investing in something, because your manager can deliver something one day and then the next day they can deliver something completely different and change. And so that's why it's very rules-based, very transparent. Investors can go to Amplify's site and see the actual systematic approach for both strategies as well as in the prospectus. So I highly advise people looking at the fact sheet, looking at the prospectus, and that way they can determine, hey, if I own Bitcoin 100% outright, I could actually take 20% and go into a strategy, and I know what I'm going to be getting. So I can have this 80-20 strategy where I'm 80% Bitcoin outright, or I'm going to supplement it with this 24% target premium product, or a product that's going to give me the max income on it. So what's nice is these are tools and you know how they're going to work given your situation.
And don't worry, there's going to be somebody like me that maybe they actually track it and do a video on it on every Tuesday and tell everybody this is where their calls are.
Yeah.
Just to keep you guys honest. And so far, I posted it today.
Yeah, and I would love for everybody to keep us honest and follow the strategy. And you can get the holdings; they're updated on Amplify's website every single day. And so the important thing when you're tracking the strategy is to follow what happens on Fridays, because that's when we close and roll, or we roll into the new options position. And so the nice aspect is come Monday morning, you will see exactly what happened in the portfolio. And one of the interesting aspects about this is that we're using weeklies to generate that consistent outcome, compound, do risk management, is distributing monthly. So it's important to note that you may look on the screen and you may see that the NAV has been adjusted. It will be adjusted down on a monthly basis as there is a payout. So investors can choose whether they want to be involved in a drip program where they can reinvest those proceeds, compound those returns through owning more shares if they want, or collect that actual options premium.
As a person of interest in Bitcoin, do you follow the M2 money supply?
Yeah, I'm glad you brought up M2, because that's one of the biggest things that we follow, not only on a US basis, but on a global basis. Because, when you think about putting Bitcoin in a portfolio, how does it fit? What its role? It's not issued by a corporation. It's not issued by a sovereignty. So the interesting aspect is that how does it play into this? And so M2 is actually a big thing we follow because it kind of gives you an indication of money printing. Another thing that's recently happened is that we've seen Bitcoin outperform the markets since this whole tariff concern, because it's actually removed from the tariff situation. So, it really is an uncorrelated asset and portfolio diversifier in that regard, right? So tethering it to M2, looking at how it performs against macro trade concerns, you can actually see it differentiates itself.
Awesome. I always recommend having something. 2%. I think it's worth the gamble, even though we don't know where the price is actually going to go long term.
Yeah, I think what you're bringing up is a very salient point, that institutional investors are starting to adopt Bitcoin in some form or facet into their portfolios, whether it's, through, treasury holding company like MicroStrategy, whether it's through an ETF, whether it's just owning it outright. There are several different ways to get access to it. But what you're seeing people do is talk about think of it as a Mag 7 name. If you own Amazon, Microsoft, Google, Tesla, one of these names, you typically own about 2 to 4 to 5% of that individual security. This is very similar to that, because you can actually plot Bitcoin against the NASDAQ 100 or against any of those names. And so that's why you're seeing a lot of institutional adoption, and they're adopting it in that 1, 2, 4% range.
Kevin, anything else? I think we've touched a lot of things.
No, I think we should leave some more for later, so we can come back and follow up and see how the strategies are doing, given that they're brand new, and we're looking to start making some monthly distributions soon. So I think we can come back in a quarter or so and see how they're performing and how Bitcoin's doing, given all the volatility and uncertainty in the markets.
I always will welcome you onto the channel, and maybe we'll have a conversation in 3 months